This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Rally rolls on. The Wall Street bull was alive and well in the third quarter, but will it be a different story in the fourth?
Red hot REITs. Some of them have been flying high, and our market monitor says they could go even higher.
Mission to Mars. Elon Musk wants to make it a reality in just 5 years. Those stories and more tonight on Nightly Business Report for Friday, September 29th.
Good evening, everyone. Welcome, and it's nice to be back. What a run it's been for stocks. The quiet grind higher pushed the S&P 500, the NASDAQ, and the small cap Russell 2000 to record highs today. And on this Friday, which is also the last day of the week, the month, the quarter, the Dow posted its first 8-quarter win streak in, 20 years. The S&P 500 recorded its 6th straight month of gains, and that's saying something because historically, the time between May and October tends to be the worst period for stocks historically. So let's get right to the numbers, shall we? Today, the Dow Jones Industrial Average added 23 to 22,405. NASDAQ was up 42, its 50th record close this year, and the S&P 500 rose 9. For the quarter, all of the major indexes had solid gains, as you see right there, about 4% or better. So what drove the gains and what may happen in these final 3 months of the year? Bob Pisani takes a look.
U.S. stocks hit record highs this quarter. Stock markets in Japan and China hit 52-week highs. The Hang Seng in Hong Kong, 2-year highs. What's driving this turnaround? Here's what's important. Bulls are betting that slow but persistent global growth, coupled with tax cuts in the U.S., will keep the markets at or near record highs in the fourth quarter. Now, the global economy is continuing to expand. Growth sectors like banks, energy, materials, and industrials all outperformed in September. The trend is expected to spill over into the fourth quarter. We're expecting double-digit growth in industrials and material earnings, and energy is also expected to keep rallying, though not as much as it was in the prior quarters. Major hurricanes had a modest impact on earnings for airlines and retail and insurers in the third quarter, but recovery efforts will likely boost sectors like materials and autos in the fourth quarter. And tax cuts and technology will also be factored in. Tech's been the market leader all year long, up about 25%, but the biggest bet is on semiconductor earnings, which are set to jump 25% in the fourth quarter. Major growth from a number of companies, including Micron. One big wild card, Apple, whose earnings are expected to grow 12% in the fourth quarter, but the stock slid 6% in September as doubts grew about how many would be buying the new Apple 8 and the Apple 10. Speaking of wild cards, North Korea and the Federal Reserve are the two other big risks out there for the fourth quarter. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So let's turn to Brad McMillan for more on the market and what he sees ahead for stocks in the fourth quarter. He is the Chief Investment Officer at Commonwealth Financial Network. Welcome, Brad. Nice to have you with us.
Thank you, Sue. Great to be here.
You think that the market is pretty much firing on all cylinders, correct?
I do. When you look at the fundamentals, when you look at the economy, when you look at all the bad news, it just keeps going up, and I think you have to respect that.
So where do you think it heads from here? I mean, we've had 50 records in NASDAQ so far this year. My colleague Scott Wapner said earlier today that 79% of the traders he talks to, people like you, think the stock market is going to go higher, but 0% of them think stocks are cheap.
I think that's a very fair statement, but the question I'm asking myself is not will the stock market go higher, but why wouldn't it go higher? What would bring it down? I mean, when you think about all the bad news that we've had, the storms, the missiles over Japan, the talk of a nuclear war, for goodness sake, and nonetheless, there's a force pushing it up, and that's the strength of the economy, the strength of corporate earnings, and it just makes sense for prices to keep rising.
Now, October, which we're heading into, traditionally, I mean, it gets a bad reputation, certainly, and for good reason, perhaps. But September also does not have a stellar reputation, and the market defied those odds. Will it continue to do so in October?
Well, what's interesting is October has obviously some bad days in there, but September historically is the worst month for the market. But what happens is if the market actually rises and rises strongly in September, that's usually a really good sign for the rest of the year. So I take September's results as a pretty good indicator that the rest of the year might be pretty good as well.
So what areas of the market seem most opportunistic for you and others that seem a little bit dear?
Well, when you look at opportunity, I think energy is at the front of the list. There's been a lot of disruption. There's been a lot of worry. Energy is actually really cheap right now, and you're starting to see it respond. So I think that's the biggest opportunity. In terms of areas to be concerned about, I think some of the tech areas, some of the high flyers in particular, may have gotten ahead of themselves, and we may see a pullback there. I think people are looking more for bargains. They see the growth, but they're worried about paying too much.
We also see from your notes that you like Europe perhaps a little bit more than the United States. What part of Europe? Developed Europe or?
Right now, developed Europe is a good bet. The European Central Bank keeps putting money into the system. Companies are doing better. People are feeling better. When people are feeling better, they're getting hired. They can spend more money, which is good for profits. And you can buy European companies cheaper right now than you can American companies.
On that note, have a great weekend, Brad. Thanks for joining us.
Thank you. You too.
Brad McMillan with Commonwealth Financial Network.
Well, the president pushed his tax cut plan today in a speech to a manufacturers group. The president said it will reinvigorate industry, small business, and the middle class.
This will be the lowest top marginal income tax rate for small and medium-sized businesses in more than 80 years. The lowest in 80 years. And it will be rocket fuel for our economy.
The president also said the newly released tax framework would result in the, quote, rebirth of American industry.
A new analysis by a nonpartisan think tank concludes that the GOP tax blueprint would spread tax cuts across all income groups, with the richest seeing the biggest windfall. Preliminary estimates by the Tax Policy Center show that the richest 1% of Americans would get more than half of the benefits. And because of changes to tax benchmarks, that plan would increase the tax burden on about 28% of middle-class workers. But as we've been reporting, many of the details are yet to be finalized, including the income cutoffs for the 3 new tax brackets.
Well, the search for a Fed chief is ramping up. Today, President Trump met with former Federal Reserve Governor Kevin Warsh at the White House. One person described the meeting as, quote, very positive, and that Warsh seemed eager to bring reforms to the Federal Reserve. There are other reports this afternoon that Fed Governor Jay Powell also met with the president. Powell is a former top Treasury official under President Bush. Current Chair Janet Yellen's term ends in February.
The Secretary of Health and Human Services is out. Tom Price, the highest-ranking health official, has resigned his cabinet position amid a growing scandal over the use of private jets at taxpayer expense. There are reports that the bill totaled about $1 million. Price offered to pay back about $50,000. Don Wright will serve as acting secretary. He is currently the department's deputy assistant secretary.
Income and spending growth cooled off last month. The Commerce Department said consumer spending, which accounts for more than 2/3 of economic activity in this country, edged up 0.1% in August. That was in line with expectations, follows a higher rise in July. Personal income up 0.2% in August after a bigger increase the prior month. The government said the data reflect the effects of Hurricane Harvey, but could not separately quantify the total impact of Harvey on that data.
Today, President Trump said the U.S. will not rest until Puerto Ricans are safe, but he also emphasized the vast challenges involved in the Hurricane Maria recovery effort. On the ground in Puerto Rico, a 3-star general is taking the reins, and Contessa Brewer is there.
Heidi Orndorff came to the convention center with her 5-year-old son, desperate to tell someone in charge how dire the situation is in Fajardo, normally an hour's drive from San Juan. How panicked her neighbors are with no running water, gasoline, or cash.
Do you know what it's like 7 days of 38 cents? I was prepared before. We had enough water, enough food. We still do, but other people don't. And I help a lot of people in the street, and I can't help them.
Post Maria, cash is king. People wait in long lines at the ATM for rationed withdrawals, usually less than a couple $100. But they need gas in their cars to drive to one of the 90 open banks or ATMs. In this gas line, customers must have cash and patience. They waited 15 hours before the fuel delivery truck arrived. Then first responders and those involved in recovery got first dibs. A funeral director waited next to his hearse. So you need the gas.
I need the gas.
Because you have 4 bodies to take care of tomorrow.
Yes, I needed 4 body tomorrow to cremation. I needed the gas. I don't have empty. I'm empty.
The government says there's a backlog of bodies at the morgue for lack of resources. Generators and fuel are going to water pumping stations, but only half the island has running water.
No, it's not enough.
The 3-star general now leading the military response on the ground says repairing the supply chain and clearing that logistical logjam will take time. Can you give me a sense personally now what you're seeing in Puerto Rico and putting that in perspective with your broader experience?
So for me, Harvey was monumental in Texas just because of the amount of flood damage. Right. But the impact here is completely different. It's like an atomic bomb went off with all of the wind and the wind impact knocking down all trees, knocking down electrical lines. It's just a very different disaster.
The Army Corps of Engineers is tackling electricity infrastructure. The airport and 2 major hospitals are now connected to the grid. The governor says companies that can't pick up their containers of essential goods at the ports will be required to sell them to the government, which will then distribute them. He's also reducing the nightly curfew by 2 hours and lifting the alcohol prohibition. That is cold comfort for Heidi, a bartender at mega resort El Conquistador.
It's overwhelming to not have water, just 1 bottle of water to drink.
And patience is in short supply, just like water in the taps, fuel in the tanks, and food in the belly. For Nightly Business Report, Contessa Brewer, San Juan, Puerto Rico.
And still ahead, did Amazon score with its first live stream of a pro football game last night? The board of Equifax reportedly considering taking back compensation for top executives in the wake of the massive data breach that affected 143 million Americans. As first reported by the Wall Street Journal, the board could claw back pay of former CEO Richard Smith and the former chief security officer. The report says the two might not get paid this year and could give up past pay that hasn't yet vested.
Apple has received a record number of government national security requests for data in the first half of the year. While not disclosing a specific number, the company said it received more than 13,000 requests, more than double the number last year. It's unclear what's behind that increase. Apple has had an uneasy relationship with law enforcement. Last year, the FBI ordered Apple to unlock the iPhone of the alleged San Bernardino shooters. Apple refused.
Well, Walmart's Jet.com will launch its own grocery brand to take on Amazon, a store brand. The move is designed to compete with Whole Foods' 365 house brand, which Amazon recently acquired. Jet.com's brand will be called Uniquely J and will cater to the needs of young urban adults, a demographic that Walmart doesn't reach as well as Jet.com does. Store brands have the potential to offer retailers higher margins and more control over marketing and distribution.
Is Amazon ready for some football? The NFL's latest experiment with streaming occurred last night when Amazon streamed its first pro game. It's part of a reported $50 million deal struck back in April. But question is, was it a touchdown? Julia Borston joins us from Los Angeles. Good to see you, Julia. So this was a big
deal. Good to see you, Sue.
It was a big deal for Amazon. Give us a sense of how well the game did.
Well, we don't actually know yet how many people streamed the game on Amazon. We were expecting those numbers already from the NFL and Amazon, but we haven't gotten them just yet. But I do have to say, Sue, the game got off to a little bit of a rocky start. People were complaining about buffering issues. At one point, the feed that we were watching actually shut down and had to start up again. So there were some complaints on Twitter. And there was also the issue of a weather delay, a 47-minute weather delay, which may have really hurt the viewership numbers.
So how big of a commitment is this from Amazon, and what does it mean to the company?
Well, a source tells me that Amazon is paying about $50 million for a total of 11 Thursday night games, and it's just for the streaming rights. It's not that you won't be able to watch these games elsewhere, but that if you want to log into your Amazon Prime subscription, you will also be able to watch them live on Amazon. This is a very important test for Amazon because they have very deep pockets, and they're trying to figure out if it's worth investing in these sports rights, which are very expensive, especially the NFL, in order to get people to really be committed to their Amazon Prime service and then maybe make more purchases related to the game.
You know, Twitter streamed some NFL games last year. How does this compare to when Twitter did it?
Well, it'll be interesting to see. It's the same. Twitter had 10 games. Amazon has 11 games. You know, Amazon did something different. They did a pre-show, a pre-game show to try to get people excited. And Twitter did not do that. So there are some differences in the way they're handling it. Amazon obviously has some other capabilities in terms of retail. They could sell things connected to the games, jerseys, etc. But the main difference here is that Twitter did not require people to log in to access the game. So you didn't even need to have a Twitter account to sign up. For this, you do have to be an Amazon Prime subscriber. But the numbers that Twitter reported seem relatively small compared to television ratings. So, for instance, last year, Twitter averaged 266,000 viewers at any given minute during the games. A total of 2.7 million people watched for at least 3 seconds. So the numbers are pretty small. We'll have to see how Amazon's numbers compare.
Well, I know you'll get them to us when you can. Thanks, Julia. Appreciate it. Julia Borston in Los Angeles.
Valeant completes the nearly $1 billion sale of its Inova unit, and that's where we begin tonight's market focus. The drug maker said the previously announced deal to sell Inova Pharmaceuticals has closed. The company plans to use the proceeds from the transaction to reduce its big debt load. Investors cheered and sent shares up 4% on the session to $14.33. Shares of several drug makers took a hit today, though, after the Food and Drug Administration posted a database on its website allowing the public to search for documented reports of drug side effects. Several reports showed a number of deaths associated with medications, but as some analysts pointed out, the information was without context and does not necessarily prove that a particular drug has safety issues. Shares of Sarepta, Ionis, and Acadia were lower in today's trading. Biogen shares recovered from earlier losses to end 1% higher. Small-cap biotech Zogenix reported upbeat results from a study of its experimental epilepsy drug. The company said the treatment significantly reduced seizure activity in children with a rare form of the condition when compared with a placebo. Zogenix said it plans to apply for regulatory approval in the U.S. and Europe next year. Zogenix shares today, look at that number, it's not wrong, not a misprint, 172% higher to $35.05.
Defense contractor Honeywell said it is raising its annual dividend 12% to $2.98 a share. Separately, the company has faced pressure from an activist investor to spin off its aerospace business, but according to reports, Honeywell said it's keeping the division. Honeywell shares were fractionally higher to $141.74. Tyson Foods says it plans to cut 450 jobs across the country as part of its plan to operate more efficiently. The company also said it was lifting its guidance for the fiscal year due to strong performance in its beef segment. Shares rose more than 7.5% to $70.45. And regulators may remove insurer AIG from stringent government oversight that was ordered for the company following the 2008 financial crisis. According to Bloomberg, regulators have been discussing a move that would release AIG from the designation of too big to fail. AIG shares were slightly higher to $61.39.
And now to our weekly market monitor, who's finding opportunities in real estate investment trusts, or REITs. He's got some names, he says, are beneficiaries of e-commerce. This is his first time on the program. He's John Hun with Adelante Capital Management. John, I hope I pronounced Adelante correctly. Let's get to your thesis. Why are you so hot on REITs?
Well, I think REITs in general, if people are concerned about REITs because of rising rates, but I think if the rates are rising because the economy is going to get better, then the landlords are going to benefit in the long run.
Let's go to your first.
For the most.
Oh, go ahead. Finish your thought. I'm sorry.
And for the most part, in the United States, the supply-demand picture for commercial real estate is in balance. So.
Your first pick is Terreno?
Terreno, yes.
Tell me about it.
It owns and operates about 12.7 million square feet of industrial buildings in 6 of the major coastal markets. As you know, e-commerce has really boosted the demand for warehouse space. But I think as consumers' expectations of next day or even same delivery starts to get heightened, the focus has shifted from the large fulfillment centers to more last mile delivery. Terreno owns smaller buildings in infill locations, so they should be the beneficiaries of that trend.
Next on the list is Regency Centers Corporation, REG is the symbol. You say, and I find this interesting, first of all, it has a really nice dividend yield of 3.4%, but you say it is the perceived loser in part of this space. Why so, and why do you like it?
So I think people think that Amazon's going to basically drive every brick and mortar retailer out of business. We at Adelante, we have a contrarian view of, for example, Amazon's recent acquisition of Whole Foods. We think that it's an admission by Amazon that it actually needs the physical buildings to deliver groceries to consumers. And to a certain extent, it's a validation of the high-quality real estate that Regency owns. The business is sound. It's been growing dividends 3% per year for the last 5 years, yet it trades at a 10% discount to breakup value.
Yeah, and you look at the stock performance, it's been down. Sometimes we have folks who are telling me to buy something that's up 200%, and I'm always a little skeptical of that. Let's go to your next pick, which is Starwood Waypoint with a 2.5% dividend yield.
Yep, Starwood Waypoint just announced a merger with another company to form the largest REIT that owns and operates single-family homes for rent. As the economy gets better, obviously that business is going to be benefit. But also, I think Starwood Waypoint and the business in general of renting single-family homes is going to get a boost from millennials getting older, but having a tendency to rent rather than own. Probably student loans gets in the way of home ownership as well. SFR has a really good geographic footprint in the high-growth markets in the Sun Belt and in the West Coast where home ownership is difficult. And also, as you know, there's been not a lot of starter homes that have been built since the financial crisis. Right. So SFR sits at a nice spot in terms of a supply-demand perspective.
All right, John Hunn with Adelante Capital Management. Thanks very much.
Great. Thanks for having me.
Coming up, out of this world, Elon Musk's big plans to conquer the red planet.
Nevada dispensaries pulled in more than $27 million during the first month of recreational marijuana sales in the state. That is nearly double what Colorado and Oregon sold during their first months. According to the Nevada Department of Taxation, those sales generated more than $3.5 million in taxes. Volkswagen is warning investors that its third quarter profit will be hit by unexpectedly high costs for repairing diesel cars here in the U.S. Those cars were equipped with emissions cheating software. The automaker is setting aside an additional $3 billion to comply with its legal settlement, which called for VW to fix about 600,000 cars that used that illegal software. Volkswagen has already agreed to pay nearly $23 billion to settle a class action lawsuit by car owners as well as other proceedings. So what's your 5-year plan? Maybe you want to buy a home, start a family, maybe retire. For SpaceX founder Elon Musk, his 5-year plan includes landing on Mars. And he's now outlining how he's going to get there. Morgan Brennan goes to infinity and beyond.
Mars may be closer than you think. SpaceX founder Elon Musk took to the stage at a major space conference in Australia to outline his plan to colonize the red planet.
Becoming a multi-planet species beats the hell out of being a single-planet species.
Musk is targeting 2022 for the first cargo mission and 2024 to transport the first humans. It's wildly ambitious, or as he puts it, quote, aspirational, attempting to bring people to our neighboring planet a full decade earlier than NASA. Some experts say it's unrealistic, since the rocket that will accomplish this has yet to even be built. That construction will start next year, funded by the company's satellite launches and government cargo missions. No estimate on price, though Musk did say last year development could total $10 billion. To that extent, he debuted a new design meant to cut costs and make the new rocket the future go-to for all of SpaceX's many missions, including a new one.
If you build a ship that's capable of going to Mars, what if you take that same ship and go from one place to another on Earth? Most of what people consider to be long-distance trips would be completed in less than half an hour.
Musk, who also runs electric car company Tesla, hopes to make those trips as affordable as an economy-class airline ticket, though details on timing remain scant. But SpaceX isn't the only company with astronomical ambitions. Rival Lockheed Martin introduced its own Mars concept this week as well, a base camp comprised of an orbiting space station and a reusable lander that will carry humans to Mars' surface and back. That camp will operate with Orion, the capsule Lockheed is already building for NASA, which has its own ambitions to send Americans to Mars by mid-2030. For Nightly Business Report, I'm Morgan Brennan.
Before we say goodnight, I'm so happy you're back.
I'm so glad to be back. I had a little jury duty and another
and you were on assignment.
On assignment earlier this week.
The
Good to be
team
home.
is back.
All
We
right.
missed you. That does it for us. I'm Sue Herrera. Thanks for joining us.
Great to be back. I'm Tyler Mathisen. Have a great weekend, everybody.